Thank you for tuning in to another edition of the Vulcan Report. This end-of-day report is for trading on July the 12th, 2017, and today is Wednesday. Looking at how the Dow performed today, you can see we've have sort of a intraday pullback. They're pretty substantial off of the intraday highs, looking at the ticker symbol DIA. With that being said, it is a strong possibility that the market could be basically running out of steam. When I take a look at where the futures ended up versus the cash indexes, not too far behind, still a $100 lag in the Dow. But when I look at how the markets performed overall, technically you can say it was a strong close, or I'm sorry, a strong rally day, but it was a weak close because look at the pullback. See if I can make that a little bit bigger for you. Let's see here. As you can see here, if you look at this chart here in the middle of your screen at the bottom, you see where it went to 215.70, and then we pull all the way back to 215.23. So this is what it looks like. All right, so totally pulled back there, which is not a strong close. That's not what you want to see. But nevertheless, it's a new high. And we also have this gap to contend with that we did not back and fill intraday. So technically speaking, you see an overbought situation right now. Market's going to have to pull back and correct like it did back here. We had a excuse me, had a break here. Market took its time, coming down, filling a gap, then head faking and just going all over the place. And the gap back here you saw took its time too, and then we finally pulled back and did a little something, filled that gap, and then just kept on trucking. So different scenario, different type of tops going on here, but this is 1, 2, 3 times a charm. So this is the third up gap that's going to need to be back and filled. So basically the way we're looking at it right now, all right, the diamonds are going to have to close tomorrow above 214.27 after the back and fill. All right, no exceptions on that. It's going to have to do it or it's going to lose out on its momentum. And then we're going to be looking at one of these scenarios possibly coming into play. And then that will put us in the testing zone. This is a different scenario this time because we're looking at something like this. All right, possible because it's happening around the momentum line this time, just like it did here when we arched up, then we gapped down and did it that way. So this is going to be interesting to see how this this back and fill plays itself out. So we'll take a look and see. Interesting, though, to say the least. Very, very interesting. All right, let's take a look at a few more things here. Let's take a look at the S&P. Traditionally, the S&P mirrors the Dow for pretty much tick for tick. So let's see how that looks now. It's going to be a second for everything to load. Okay, here we go. All right, looking at the daily chart, yep, same scenario here. As you can see, back here, same time, back in May. And then here we go right now. So scenario has not changed, same chart, identical chart. But it is slightly different because we don't have the basing out like we did in the Dow. So even though it's the same chart pattern, the health of the chart is different. The S&P was mad bearish, wherein the Dow had been mad bullish. And then we gap out like this. So I think this is fake. Let me get my tool out. I think this is probably fake. I don't think we're going to get any follow through. I think we're going to see one of these babies come into play. A bar like that, or even possibly a bar like this one, is going to come into play in the S&P 500 because the chart characteristics are different, to say the least. They are very different. Let's take a look now at the Nasdaq 100. If my computer will work with me here. All right. All right, so here we go. Here's the Nasdaq 100, the QQQ. All right, and you can see the complexion on this one is also, it differs from that of its Dow and S&P counterparts. So this one here, this gap up happened inside the Kumo cloud, which is very interesting, very telling that we were in the Kumo cloud and then this happens. All right. Now here on this one, we had this closer together, not quite really a gap per se, but nevertheless, market came roaring back. So this one has fewer gaps than its other counterparts as well. Very interesting to say the least. Very interesting price action. We broke down in here. Let me get my tool out. All right, so we broke down here. Then the market came back, and now we're doing this here. The way this is shaping up is very interesting, to say the least. Let me show you what I mean, because there's a possibility that, and this does it draws a little thick, but there is a possibility here that we could see something like this happen. Price action below the Kumo cloud. And we'll know because, once again, we can draw this out to the magical date of July the 31st. All right, so this is an interesting set of circumstances. Now, this is not just based on what you're seeing here. This is based on how the algorithms have been reading, which you can't see in the chart. But if I were to place it on the chart, this is what it would be projecting. And there's a good reason for this projection, which is very interesting to say the least. So back and filling is going to be interesting on the Qs as well. Let's see if it does it tomorrow, if it can get a close above 138.78. If we don't, then this is going to act as a vacuum right here to suck prices into it, into the vortex, up into this zone, which will prevent it from getting outside of the Kumo cloud up and over and flatlining below 145. Interesting turn of events that's happening here in the stock indexes. All right, let's move on. Let's take a look at the Russell now. Let's see what the Russell has to say about all this. All right, Mr. Russell. Okay, Mr. Russell's different because it's been trading in a very wide trading range. All right, top to bottom, this is what we've been looking like. We have bottom support here, top support here. So that translates into trading at support is at 1396.87. Resistance is at 1433.79. All right, so that is quite the trading range. All right, so again, you got an average of about 35 points, give or take. All right, 35-point trading range in the Russell. That's pretty wide. prices have been staying within that zone. All right, so technically speaking, as of today's close at 1424.32, we have gone absolutely nowhere. All right, we're still trading within the trading range of June the 9th. So all this up and down, prices have gone nowhere since June. Here we are in July. So we have a month of consolidation top side of the Kumo cloud. All right. And then now here we are at the ramps helping to push the price higher. But as we get closer to the next phase here, after July the 21st, then we need to land somewhere. So from here, this is what it looks like. Believe it or not, there is an undertow. The undertow is here. This is your undertow here, okay? There's a strong undertow right here. All right? And what you want to see, once you get to this zone here, right? You want to see if price behavior can get a little bit of push before it gets to this major ramp right here. This is the major ramp right here. All right, this is a major ramp. Okay, so put a little X right here. This is the ramp that it's going to need to get to the 1440 level. All right, but we discussed the undertow up in here. The way it looks is like this. You have until this date, July the 21st, to avoid falling into the vortex with the very powerful undertow. All right, this is where we are. This actually connects right up in here. All right, this is what this looks like. Believe it or not, it is a very powerful undercurrent that's very difficult to see with the naked eye looking at the chart. So what we need to have happen is it's going to need to break out of the invisible vortex, and what we want to see ourselves, we want to be trading up in this level by the time we get to July 21st. Then you can actually break it. This right here will act as a slide, and if price is correct here, draw the line across. Notice how you get to what I drew here with that red line, that support area. Key support area is right up in here. So even if it does come, it will bounce here. It can dead cat bounce, put prices to here where we could consolidate, possibly see a pullback, not all the way to the cloud, but maybe close to it. And then we consolidate, we consolidate in here, and then we get to this ramp, and then that will compel prices higher. So that's what is happening underneath the surface with the Russell. The Russell is going to lead the way here in the price action. There's only one caveat, and we saw that caveat with the Nasdaq 100. It could actually break down and get caught in the vortex before the Russell, before the Dow, and the S&P, because this is sticking out a little bit further away than the Nasdaq. So the Nasdaq could be the possible leader on the way down into the vortex if it gets trapped. Second best will be the Russell. So it's between the Nasdaq and the Russell, who's going to lead the way into the vortex. Can the market stave off this? It's possible. Let me tell you what I think can knock prices down into this vortex. Let's take a look at what that would be. Ladies and gentlemen, drum roll please. That would be your bonds. All right, let's look at these bonds. Ticker symbol ZB. This is the futures. Notice how we came up here. We bounced today. We rallied hard today based on Janet Yellen's testimony. Closed at the 152.28, almost 153. This is trying to gain enough momentum to push its way out of that cloud. It wants to push up out of this Kumo cloud. All right. It wants to target itself here. This is where prices want to go, because then it could just march its way up the ramp here. And then that way it gains key support at this juncture, gives it enough momentum to top out maybe around here, possibly. And then you have sort of a possible slide in the 1st of August, but this is not strong, as there's really no undercurrent here on this one. That's further out, and you can't see it on the chart. That's further out. That'll put you into September, where there's a vortex at that point as far as bonds. I think bonds have a very, very strong probability to be pushed higher here, which is very, very interesting, because the Fed seems like they want to raise these rates. Now, if the Fed doesn't raise these rates, these bond prices, I think, are going to scream higher. I think the bond prices scream higher because it's not looking like the Fed's going to do anything. The Fed raises the rates, though. We got here and here before the bonds fall into the vortex down in here. That would happen because you're looking at this August time frame, where I think we're going to get, let me get my other tool here. I think we're going to get this. We could get, I'll write it up here. We could get the Fed surprise. All right. The Fed surprise will fall somewhere between here and here. I'm really leaning more toward around here, August the 7th. We could get a Fed surprise where they just go ahead and raise those rates to make the announcement intraday in the market, and then that would put the bonds, make them slide here into the vortex, which you can't see, but it's down up in here. This is where we are. So this is very interesting, what's shaping up here in these markets. Summer times are usually very boring, not a lot of price action or movement, but because of all these key geopolitical situations that are brewing underneath the surface, this could be very interesting, folks. All right, let's look at something else that has taken place today. All right, here we go. Let's switch over to gold. All right, gold was able to muster up a nice little rally today, but here's something interesting. It needed to close above this, 1218.50, 1218.30, 1218.50, and what did we get? We got 1218.20. It closed in the mid-range. Mid-range. Very interesting. I'm sorry, no, the 1218.20 is not the close. That's tomorrow. We're already until the next day's, into Thursday's session. This is I'm sorry, so I take that back. We closed at 1219.70. So we closed at 1219.70. So we did manage to gain that momentum. So this is a good momentum carryover for Thursday's trading. All right, I think what needs to happen is going to be interesting, because if the market's allowed, and I use that word allowed loosely, If it's allowed to get to 1233.10, that's the first resistance sign is right here. Let me get my thing out. All right, so you got resistance here, and you got your second resistance here. Notice how that puts you smack dab at the bottom of the Kumo cloud, which is heavy resistance. Heavy resistance. All right, so we got the first is at 1233.10. The second is going to be at, see, Kumo cloud's going to be here, so you could be around the 1260 level. I don't think it's going to be allowed to get that high. I think the rally, the first smell of blood in the water, is going to be here, because it's going to get here, bump its head, and probably cut the flesh. And when you're bleeding, it bleeds water. Then the sharks right here with their sharp teeth. Here's a little fin. Dun 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 dun. Dun 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 it, dun 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 it. Here's jaws. Dun 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 it, dun 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 it. They're going to smell the blood in the water, and they're going to come and they're going to target this first situation right up in here. First resistance around 1233.10. Sharks are going to smell some blood in the water. Dun 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 it, dun 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 it. They're going to come and they're going to try to sell this rally. All right, if the teeth aren't sharp enough, then prices are going to get to the second resistance, and that's at 1245.30. Even if it's possible and they can peep their head up out of the water and get breath, it's not going to happen, because this 1260 right here is mad resistance, crazy resistance, bottom of the Kumo cloud. Going to have a tough time cutting through that. But it is possible, it is very possible, that you could get that kind of oomph out of the market. Going to need to move fast, because the sharks are a-coming. The sharks are a-coming. All right? The shark is not Jaws. This is Jaws's big, scary brother. All right? I'm giving you his name, because they didn't mention his name in the movie, in the Jaws movie. They did not. I'm revealing it right here live for you on YouTube. That's Jaws' big brother's name. Not Fred, but Fed. Take the R away. Fed. His name is Fed. And as long as they can jawbone their way out of this one and say there's no inflation whatsoever, then Jaws is going to come. He's going to see the blood in the water, and he's going to attack these prices right here. All right, Jaws is made up of thousands of tiny little bots that you can't see. They're algorithms, and they're going to come and they're going to hunt these resistance areas, and they're going to beat the price back down again. However, if the Fed leaves things alone, blah, 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 well, guess what? You could get a royal flush up in here. It's going to be these are some interesting times, because the Fed also mentioned that they were going to start, reducing their balance sheet. First of all, I don't know if people have been following their speak very well over the years, but I was the first person to reveal on YouTube back in 2008, 2009, or whatever, 2010. I don't know. Go back and look at my videos. You'll find it. Where I was explaining the Fed had a trading account, and they were going to be buying up securities like crazy. People didn't understand what I was saying back then, but I think they clearly understand it now. The Fed has always had a trading account. It's just now that they're revealing it to the masses, and they don't mind that people know it. They don't mind that the Fed props up the markets. They don't mind that the Fed is sometimes the only person buying up all the securities. So I need you to open your eyes and open your mind to what I'm about to say. If the Fed is usually the chief buyer of securities, doesn't that make sense that the Fed also, on the opposite side of the trade, can also be the big shorter, the big seller of securities? Don't you ever think that the Fed does not enter into these financial markets and move these markets by buying and selling short even. All right? Don't you believe it if someone tries to tell you that they don't. It's against their rules and the way they do things. That is a lie. Their primary mandate is to keep things orderly and flowing, right? Keep this economy up. So they will do whatever it takes to keep the economy up. If it means smashing more gold and silver to finance what they've been doing, then so be it. All right? Watch out for the big Fed. That's all I got to say on that one. All right. Let's move over to our next chart, which will be Mr. Silver. All right. I knew better to type it like that. All right, here we go. Silver. Silver is a little bit different because here we are. Similar but different. It's been weak for so long. It's trying to muster up enough courage. But unfortunately, it's looking like this is going to be stretched out into here. The only thing that can help it is the same scenario that I gave in gold. It can get a sympathy rally with gold depending on what the Fed does or does not do in the coming weeks. All right, so there you have it for high-ho silver. I have hopes of so. I can't wait to get back on board with the silver. Come on, silver, do your thing. Rally. Don't go to $5 because if you get caught in the vortex, it's going to $5. All right, etch this in your mind, folks. I've been warning about this for some time. So let's go ahead and put it up here so everybody can see it and know it. I told you here, you heard it here first. You've been hearing it. $5 if it gets caught in the vortex, folks. All right? That's the problem that we are in. We need to overcome this. At the end of the day, though, there is light at the end of the tunnel. There is gold at the end of the rainbow. Because when all is said and done, and when all heck starts to break loose, then you're going to see silver way up yonder. And it's going to be too late for people to get on the train because then the COMEX is going to start raising margin requirements, et cetera, and kick people in the shins. That's what they always do, folks. So we will let you know when it's time to get in there and do your thing. All right, here's your GBTC, and you can see that it was up 23 bucks today, almost 24 bucks. Nice run up because the coinage is up. All right, so you can see here your cryptos gave you a nice run up today. You got a nice bounce. Didn't really spill over too well to the BTSC. It's still mad weak. So is the BITCF. Still mad weak. So is your FFMGF. Somebody on YouTube, a couple people on YouTube not long ago were talking about how this was the thing and it was in play and ain't nothing happening. It's not in play. It has not even lifted off. It looks like it's trying to form a base up in here, but I still don't see it. It's below the Kumo cloud on the daily chart. All right. It's below the Kumo cloud on the weekly chart. All right. It's been trying to base out for weeks now, months even now, about 2 months. This thing, almost going on 3 months, is trying to base out. It's trying to do a little something, something. It could get help, though. Let me go ahead and show it to you. All right, because I got to keep it real. You know, I got to show you everything. All right, here's what you got. You got a ramp here Now ramps take place top side of the Kumo cloud, but underneath here you do have a algo vortex up in here. All right, depending on how low we are, where we are at this time frame, at this juncture between August, the beginning of August, end of August, we got an opportunity to get topside the Kumo cloud. Fair to do so, you get one more opportunity right here. And this is October, okay? If you can do that between the beginning of October, get topside the Kumo cloud, then this thing has a chance to get out of the penny stock status and get to the buck status. All right, get to the bucks. So you got some things brewing here. You do have some massive undertow here, but it's not a current that pulls down or goes straight across. It's sort of like a spout, a well spout, where it pushes it up. And it's just the way the algorithms have been behaving. They don't want you to know that, so I'm snitching, I'm telling it, that there's bots waiting for this time frame and watching price. All right, if the price gets too low around here, I guarantee you're going to see some massive up days, some water spouts that are going to push prices like that. All right, these are two water spouts. All right, you got water spout days, two W's for water spouts. Time frames, beginning of August, beginning of October. It's the last chance. No more water spouts after that. After that, you just get into a void, not a vortex, but you get into a void up in here, okay? Got a void where prices are just, there's really not any noise around this time frame, but there is noise in between these two. All right, beginning of August to October. All right, okay. Let's see here. Bear with me a moment. Gotta pull up something real quick. Okay. All right. Okay, so let's see what else we want to look at real quick. We did gold and silver. We talked about the coinage. Oh, let me just tell you the specifics that I got as of right now. As of right now, the Ethereum is up almost 15%, up over 14%. Ethereum Classic today rolled up almost 40%. And Bitcoin itself currently is up 2.64%. Litecoin is up almost 7% today. So nice, massive upsurges today in your crypto space. All right, massive movement today in the crypto space. You can't count your coins out, baby. All right, the cryptos are red hot, red smoking hot. Everybody wants to start talking about it now, even though they know nothing. All right, so with that being said, that's all I got for now. I think that's all we're going to do at the moment. Come on over to pulsewavetrading.com so you can learn how to navigate these murky algorithmic waters of these financial markets. Learn how to time these markets. Find out when to get in and to get out, when to buy, when to sell. Find out what the Federal Reserve central banks don't want you to know. PulseWaveTrading.com, and also you can follow me now on Patreon. I'm preparing some specific exclusive things just for Patreon for those that follow me over to Patreon. All right. So with that being said, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.